Finance Minister Nirmala Sitharaman on Friday announced the slashing of corporate tax on domestic manufacturing companies. The announcement came ahead of the GST Council meets scheduled in Goa today. Centre slashed effective corporate tax to 25.17% inclusive of all cess and surcharges for domestic companies.
Growth and investment. A new provision has been inserted in the Income Tax Act with effect from fiscal year 2019-20, which allows any domestic company an option to pay income tax at the rate of 22%, subject to condition that they will not avail any exemptions or incentives. The effective tax rate for these companies shall be 25.17%, inclusive of all surcharges and cess. So the effective tax rate for these companies shall be 25.17%, inclusive of all surcharge and cess.
Making the announcement, Nirmala Sitharaman said the new tax rate will be applicable from the current fiscal, which began on April 1st. We today propose to slash the corporate tax rates for domestic companies and for new domestic manufacturing companies, the finance minister said at the meeting. She said that total revenue foregone for a reduction in corporate tax rate is estimated at 1.45 lakh crore rupees per year.
The total revenue foregone for the reduction in corporate tax rate and other reliefs is estimated 1,45,000 crores per year.
In effect, the corporate tax rate will be 22% for domestic companies if they do not avail any incentive or concession. The changes in the Income Tax Act and Finance Act will be made effective through an ordinance. The finance minister also said companies opting for 22% income tax slab would not have to pay minimum alternative tax, MAT. Nirmala Sitharaman further said, new domestic manufacturing companies incorporated after October 1st can pay income tax at a rate of 15% without any incentives. Meaning, the effective tax rate for new manufacturing companies will be 17.01% inclusive of all surcharge and cess. Nirmala Sitharaman further said companies can opt for lower tax rate after the expiry of tax holidays and concessions that they are availing now. She further said that super-rich tax will not to apply on capital gains arising from sale of any security, including derivatives in hands of foreign portfolio investments, FPIs. The new corporate tax cuts are expected to boost economic growth, which slipped to a 6-year low of 5% in the April to June quarter.